As you probably heard by now, the Trump administration is considering a 50-year mortgage product. 50 years. And while there's a lot of backlash on the internet, there are some finance bros that are like, man, this is probably one of the best things ever because now I can increase my leverage, lower my monthly payment, take the savings on that $400,000 house at whatever interest and say I'm saving $200-300 a month. I can take that savings and put it in some kind of investment vehicle, and I'll be earning so much interest on my savings, it's going to counteract the increased amount of interest that I pay on the mortgage because the first few years of a mortgage payment are pretty much just interest payments. Cut the tape. Now, while that may or may not be true, while you may be able to take the money and make money and all of that kind of stuff, the original stated, keyword stated, intent of a mortgage was not for finance bros. It was not for financial wizards. It was for the average John, the average Jane to be able to afford the American dream safely. That's what we were sold on for years, that's what mortgages were intended to do. Before the 1930s, there really weren't these standard kind of 30-year, 15-year mortgage packages. It was you negotiated with the bank. It might be a 3 to 5 year kind of deal. Every year you renegotiated with the bank. And so it was a really kind of crazy wild, wild west of home buying. And after people got after people really basically just got in over their head and the default rate climbed to 40 or 50%, that's when FDR came in and said, okay, we're going to create the FHA and these other agencies to kind of help standardize the whole mortgage industry. And so it was always sold as a way to protect the average consumer and make sure that the average person can get a home, not for finance bros to do financial wizardry and make a few dollars. The other part is when you extend products like this, similar to the ninja loans prior to the 2008, 2009 global financial crisis, when you create these types of products, two things happen. One, you bring in entrants that really should not be considering mortgages at that time. You increase demand for homes, which increases the amount which basically increases the amount of the average home price. It makes homes less affordable on average, and it puts a lot of people at risk. And that's not the stated intent of having these types of mortgage products. So I just dropped the video really breaking down my take on the 50-year mortgage. Check it out and leave a comment.